Moving averages are one of the most commonly used technical indicators. Now we can use them to give us a sense of the trend and the general direction of the market. This is how a simple moving average is calculated. Now let's say we're looking to create a 10-day simple moving average of this particular price chart. What we will do is we will take the prices for the last 10 days, add it together and divide it by 10. And that will basically give us the average of the past 10 days of prices. So to create a moving average, when a new day is formed, we simply take the new data, we add it to the set. At the same time, we drop the oldest piece of data within the set. So that gives us an updated average of the most recent 10 days of prices. Therefore, the moving averages gives us a constantly updated average price of the stock over time. Now, the more data you add to the moving average calculation, the smoother the line is going to be. So right here for this price chart, we can see the moving average, the 10, 20, 50, 100, and 200 moving averages. What do we observe? The higher the number, the smoother the line is going to be. And that's because there's more days of price information that's being added to the calculation. Whereas we also observe that the smaller the moving average number, basically less data is being added to the calculation. Therefore, the line is going to be a lot more choppy, a lot less smooth, and also relatively closer to the current price than the moving average with much larger numbers. Okay, so why do we use moving averages? What is the advantage? Basically, it helps us to smooth out the data prices so that we can see what the trend of the market is. In an uptrend, we want to see the moving averages also moving up along with the price. We also want to see that the smaller moving averages are stacked above the larger moving averages. In a downtrend, what we hope to see is the opposite. Basically, the moving averages are pointing downward along with the price, and the larger moving averages are above the smaller moving averages. Also, the crossing of moving average lines could signal to us that trends are about to change. So when the smaller moving average crosses above the larger moving average, it could suggest to us that a downtrend has ended and maybe an uptrend is about to begin. Maybe. And likewise, when a smaller moving average moves below a larger moving average, it could signal to us that an uptrend is about to end and maybe a downtrend is about to begin. But again, maybe. However, one very important thing to note is that moving averages, they are derived from historical prices, which means they merely tell us what has already happened before. They don't have any ability to predict what's going to happen in the future. They can't tell us where the prices are definitely going to go. So you should never make investing or trading decisions based on the moving averages and the moving averages alone. I know there are a lot of popular trading strategies out there that say things like, oh, when you see the 50 moving average move above the 200 moving average, you buy. You don't think, you just buy. And then later, when you see the 50 moving average cross below the 200 moving average, you sell. You don't think, you just sell. If only it was that simple. But if you're just starting out with investing or trading, I would not recommend that is the basis that you use for your trading and investing decisions. So how then do I use the moving averages? Well, when I'm making investment decisions, I can use the moving average to inform me of the trend, and that can help me to plan my entries. For example, let's say I'm bullish on this particular stock because I like the business of the stock and I plan to buy it. However, what I'm noticing is that the moving averages could signal to me that an uptrend might be ending. Now, with that information in mind, then I might want to think carefully about what my next steps are going to be. How am I going to enter in this position? Maybe I might want to enter a much smaller position first, or maybe I might want to wait until there's a much better opportunity before I can enter. So the moving average information, it gives me a sense of what the market is doing, and that helps me to plan how I'm going to execute my position. But once again, I would not recommend using moving averages as a sole indicator to generate buy or sell signals. I really don't think it's that simple. I really don't think it's that easy. But I'm sure many people out there might not agree with me. What do you think? Like, subscribe, and let me know in the comments below.